the short and long term bull case scenario from my side. The long term bull case scenario is from the interview of Gautam Adani. He says we got to $1 trillion 58 years after independence. Post that trillion, it took us 12 years to get to $2 trillion, and the next trillion was added in 5 years. Now, this presumption behind all his investments in business is that India will add $1 trillion to its GDP every 18 months going ahead. Now, even if we become conservative and discount this to 24 or 36 months per trillion instead of 18 months, as forecasted by Mr. Adani, we are in for a long bull market for years and decades to come. For a global businessman and an investor, investment and doing business in India is the most viable among other similar alternatives. To elaborate, China is promising but completely uncertain. Southeast Asian countries are in their own domestic crises. Russia, no foreigner will go and invest there. South Africa, there is complete lack of power, roads and manufacturing infrastructure. Brazil is a very open communist agenda. Turkey, the currency keeps falling, the local issues keep rising. Not only has India solved these issues which they once had, but also it has a rich and diverse domestic market. The base of domestic sales coupled with exports is the best combination which any MNC would like. Now coming to the short-term criteria for a bull case. Cyclical stocks like metals, base chemicals, agri-products, plastics, APIs, textiles, etc. seem to have digested all the inventory or deflation, demand reduction losses as of now. Most of the Q1 con calls of companies in the commodity sector have mentions of the higher cost inventory being sold off and the worst balance sheet effects already done and dusted. Indian companies are more accustomed to work in an inflationary environment compared to the Western counterparts. They are nimble in reducing costs and making strategic bets to cope up with the inventory cost fluctuations. Plus, we are at the end of the interest rate increase cycle. There is light at the end of the tunnel. If China can go from per capita GDP of $2,000 to $5,000 in 5 years, it is safe to assume that India is in the same sweet spot as of now. Optimist or not, all data points lead to a scenario of a sustained bull market in India.